This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, in our first lecture, having seen the various group relationships that may exist within a group and defining them in two categories, 51% groups that we focused on in that first session, and 75% groups, it is the 75% group relationships that predominate in terms of examination questions and are the most involved and most important so far as we are concerned. And the first and foremost of those is dealing with group relief of losses available within a 75% group. So the first thing that we need to do is to define within a group structure who may group relieve with whom. Once we know who may group relieve with whom, we can then see what amount of loss may be relievable against what amounts of profit within a claimant company for the group relief. The concept of this is a simple one, that if you have members of the same 75% group, the loss reliefs are not now limited to just offsetting a loss of a company against its own profits, whether in the current period, whether carry back or carry forward. What we can now do is to move, as we'll see, any part of a current period loss from one 75% group member and offset against any part of the taxable total profit, the TTP, of any other group member. Now, the only time that we have any interest, as it were, in terms of sorting out who may group relieve with whom, is where we get sub-subsidiaries, the indirect subs. It's the same problem that we had when dealing with indirect subs and related 51% group companies in that first lecture. So let's have a little look at what we've got here. The definition of a 75% group. One company is the 75% plus subsidiary of another. So we've got a parent company, and the parent company owns 80% of S1. Clearly, one company, S1, is the 75% subsidiary of another, the parent company P. Or we've got both S1 and S2. Now, in both cases, the parent company owns the minimum required 75%. So who's in that group? All three companies are in that group. So if any one of them were to make a loss, they may group relieve against the profits of any of the others. So there we've got the direct relationships in terms of determining our group structure. When we talk about 75% plus, we at this level tend to mean the share capital. It'll be a level of shareholding, but we must also then have and at least 75% of the subsidiary's assets on a winding up and 75% of the subsidiary's profits on a distribution. But the usual interest is when we go down to indirect or sub-subsidiaries, because just like when we were looking at related 51% group companies, the holding company now must have an effective interest in any sub-subsidiary of at least 75%. We must have an effective interest in any indirect, any sub-subsidiary of at least 75% for them to be in the same group for purposes of group relief. So let's have a look at a little example to illustrate this one. And here's one that we have set up for our accounting year end, 31st of March 17. We've got the Villa Group of Companies, our old friend, the Villa Group of Companies here. And Villa has got two directly owned subsidiaries, A and V, where the shareholdings are 90% and 80% respectively. And then A owns 90% of F and V owns 80% of C. So the question is, who may group relieve with whom? So taking it from the top, can Villa group relieve with A? Yep, there the direct is 90%. Can Villa group relieve with V? Yeah, the direct link is 80%. So if any one of those, just like in the example we drew onto our course notes a moment ago, if any one of them were to have made a loss, we could group relieve with any other. But now it gets more interesting with the third layer, the sub-subsidiaries, the indirect subs, where the effective must also be the required 75%. So 90% of 90% equals an effective 81%. So Villa, therefore, can not only group relieve with company A and company V, but also with company F. Can it, however, group relieve with company C? 80% of 80% is 64%. So no, it cannot. But who can group relieve with company C? Answer, V, its own immediate 80% parent. So just like with related 51% group companies, we've got the issue now that we might have, for purposes of group relief, more than one group that exists within our 75% group structure. Now, this is only going to happen where you've got indirect subsidiaries there. If you've got direct subs, it's just, is the direct link 75%? Job done, thank you very much. But let's look now at who could group relieve with who. Here there's going to be two groups for purposes of group relief. You've got the main Villa group. Villa can group relieve with company A, with company V, and with company F. And what that means is, if any one of them, whether the parent company Villa, whether a subsidiary company A or V, or an indirect, a sub-subsidiary company F, any one of them could group relieve with the other for any part of a current period loss. But separately, V and C form a separate group for purposes of group relief. So, C can only group relieve with V, whereas V can group relieve with its own subsidiary C and with any of the other members of the Villa group. So if company V made a loss, it would be able to group relieve that loss against any of the other Villa group companies. If Villa or A or F were to make a loss, they could group relieve with one another and also with company V, Villa, A, V and F. They, however, Villa, A and F, could not group relieve with company C, because the link down from the principal parent company Villa down to company C is only an effective 64%. So two groups for purposes of group relief. The wider Villa group, Villa A, V and F, and separately companies V and C. So job one, when you've got a group's problem, is to identify the group structure as to who may group relieve with whom. Having done that, there is then the question of what can be group relieved against what. Now, we've already said this, but let's have a little look at the note. What we have for purposes of group relief is that any part of a current year trading loss may be group relieved, so of one such group company may be group relieved against any part of another company's taxable total profit of a corresponding accounting period. So any part of a current period trading loss may be set off against any part of the claimant company's TTP of a corresponding accounting period. Now, one would expect that if you've got companies in the same 75% group, that they probably all prepare accounts to the same date. However, examiners can do whatever they like. Now, group relief predominantly for us will be of a trading loss, but there are a couple of other, though very much less likely, prospects for group relief. And that is, group relief is also available in respect of excess qualifying charitable donations and excess property income losses. Compare that with the word any there for a trading loss. Any part of a current year trading loss. So a company making a loss does not have to use its own loss against its own other profits of that accounting period. If it wishes, if the group wishes for it to happen, then all of that current period loss may be group relieved against other companies' profits. But if we are talking about qualifying charitable donations or property income losses, only excess qualifying charitable donations or excess property income losses may be so group relieved. What do we mean by the word excess? They are only excess if they exceed the total profits of the company concerned before any other losses have been applied. So quite literally, your donations or your property income loss are bigger than the total profits of that company for that accounting period, and you've got an excess amount. Then the amount that is excess, after you firstly used the deduction from total profits, the excess is then eligible to be group relieved. Okay, let's have a little example to illustrate that. So let's go back to our notes here and move on to this example. So if therefore in our, let's got our Villa group of companies. If, for example, company A's performance, so company A was able to group relieve with the other members of the wider Villa group, Villa, V and F. Let's say, therefore, that company A had this performance. Again, you may wish to note this down. For trading income, it actually made a loss of 240,000, the bracketed figure here. But that means on its corporate tax computation, we never ever put a negative, a bracketed figure. We have a nil assessment. But it does have another amount chargeable. It has property income for the period of 40,000. Hence its total profits, £40,000. It's got a qualifying charitable donation paid at 10, so it has a TTP without any other loss reliefs applying of £30,000. So question therefore, what is the maximum amount of loss from here this company, company A I think we said it was, that could now be group relieved within the Villa group of companies? And it's very simple. There is no calculations to do. The rule says any part of a current period loss. So there you go. You've got a current period loss of £240,000. Any and all of that is eligible to be group relieved. Now, look back to the relationship that we had. Villa owned 90% of A. Whether it's 90%, 100%, whether it's 75% exactly or anything more than 75%, it means as soon as you have that magic 75% figure, you have access within your group to all of that company's losses. Not 90% or 80 or 75, all of those losses as soon as you hit that magic 75% shareholding level. So it now means that any part of that loss of £240,000, any or all of it can be group relieved. Where could it go? A's loss could go to Villa, could go to company V, could go to F1. And we get to choose how much of that loss will then be group relieved against any part of the claimant company's TTP. Looking at what we've got, what other options might we have had for the use of that loss other than to group relieve it? Much, I have to say, the most likely outcome that you would have. Well, you, I hope, remember that a company can use its own losses immediately by set off firstly against the total profits of the current period. There are your total profits, £40,000. So if you wished, you could claim against that. You can't claim against the bottom line TTP. The current period claim for a company in its own right is against total profits. Now that would mean that you would use £40,000 worth of loss against those profits, and that would mean that those donations would be wasted because there's nothing to deduct them from. Now be careful. You may be thinking, but hang on a moment, on that note that we saw just a few minutes ago, what we saw was, that excess qualifying charitable donations were themselves eligible for group relief. But look at what we say down here. Such losses are only excess if they exceed the total profits of the company concerned before any other losses have been applied. So looking back to what we have got here, if we apply the loss of 40,000 against the total profits, means that there's now nothing for the donations of 10 to be deducted from. They are not excess donations available for group relief. In this example, the only time you'd have had excess qualifying charitable donations is if, in the exercise we've just seen, if those qualifying charitable donations, instead of being 10,000, had been, say, 50,000. That would mean that your TTP was nil, and now you would have an excess qualifying charitable donation of £10,000, and that would be available for group relief. That then could be group relieved. But as it stood, with only a 10,000 donation, then no, there are no excess donations. 10 is more than covered by the 40. We'd have to have, like here, 50,000 to have an excess qualifying charitable donation. So, going back to the original issue, how much of the £240,000 loss was eligible to be group relieved? Answer, all of it. Also note we've said that only a current period trading loss was available for group relief there. So if you'd been told that the company also had a brought forward trading loss from the previous period of £120,000, then that £120,000 is not now eligible for group relief. It would have been eligible for group relief in the accounting period in which the loss arose. But as soon as a loss is carried forward, there's only one thing that can be done with it. And the only use of that brought forward trading loss is to set it off against future trading profits of the same trade. Are there any future trading profits here of the same trade? No, it's a nil assessment. Hence, what happens to the £120,000? What was brought forward will be carried forward to set off against, as and when they arise, future trading profits of the same trade. They would not now be eligible for group relief this period. Only a current period trading loss is eligible for group relief. What did it go against? It goes against any part of the claimant company's TTP. Well, let's have a look at what we've got here for, what's going on here? Let's have a look at what we've got in relation to, there we go, a claimant company now, a profit-making company. Right, again, you may wish to note this down. I'd advise that you do. Now, one of the potential claimant companies within the group has got trading income of 60, property income of 50, and chargeable gains of 70. Therefore, it has total profits of £180,000, and it has also paid out during the accounting period qualifying charitable donations of £10,000. The question, therefore, what is the maximum amount of group relief that could be claimed within this company? What is the maximum amount of group relief that could be claimed within this company? There are two things to look at when working out group relief capacity within a group. One, what is the amount of loss available to be group relieved? We saw that in our example above to be the £240,000. And then it can go against the claimant company's what figure? Now look back to the note if you need to, But what does it go against? What, therefore, is the maximum amount of group relief claim that could be made here? Now, what it isn't is that total profit that you're looking at there of 180. Because if you go back to the notes, if we haven't remembered it, then the set-off that we've got is against the company's taxable total profit of a corresponding accounting period. So we don't have problems about only offsetting a loss against total profits or only offsetting against future trading profits of the same trade. What we've got here is a set-off against a bottom line TTP and any part of that TTP. So there's your taxable total profit, 170. So what therefore would be the maximum group relief here? £170,000. If you wanted it to be less than that, that is fine. We had an available loss of, I think it was 240,000. So in this particular company, we could go up to £170,000. We could take it all out. There would be no worry about wasting those donations. The loss group relief goes against bottom line TTP. So going back again to our note, we should now be able to establish how much loss, a current year trading loss, can go against how much profit, the company's, claimant company's taxable total profit of the corresponding accounting period. Again, if we had excess qualifying charitable donations and or excess property income losses, i.e. after deducting from total profits of that period and before any other loss reliefs have been claimed, if we then had excess, they too would be group relievable. But it is sort of 95% certain that the loss you're going to have to deal with is going to be a trading loss there. Who can it go against? Companies in the same 75% group. And when we talk about sub-subsidiaries, we are talking about effective 75% group relationships. So, you have a little example here. State the companies to which Z plc may surrender its trading loss. In this, the year ended 31st of March 17. I suggest again at this point that you pause, have a little go at that. Shouldn't take you more than about a minute there, but review through the answer in the back and make sure that you are then happy with it before rejoining us. Okay, hopefully you've checked through the answer to this and hopefully not any major problems there. What we know is, although this is a rather unlikely practical situation in terms of a group structure, what we have is for group relief to be available, there has to be, on an indirect interest, an effective 75% holding. So Z owns 100% of A, fine, they can group relieve. Then the link from A down to B, 80%, 100% of 80% is an effective 80% interest. So Z can group relieve with both A and with B. But then when we go again down to C Limited, then we are talking about a further 80%. 80% of 80%, as you know, will be 64%. Therefore, Z cannot group relieve with C Limited. Who can group relieve with C Limited? Its own immediate parent, B. So C Limited can only group relieve with B Limited, its parent. B can group relieve with its sub, C, or indeed with its parent or principal parent company, A Limited or Z plc. But Z can only group relieve with A and B. Okay, again, if not already, do check out with the answer to that. Make sure that you are happy with that as to who may group relieve with whom. And now let's summarise the issues and the rules that we've seen so far as group relief is concerned. We know that trading losses may be surrendered to other companies in the group, which may then relieve those losses against their own taxable total profits. Any member company may surrender its loss to any other member of the group. So it doesn't have to be in one particular direction. So a holding company can surrender to a subsidiary. A subsidiary may surrender its loss to its holding company or a subsidiary to a fellow subsidiary company, as long as they are bound within the same effective 75% group, then any one can group relieve with any other. The surrendering company is obviously the one that makes the loss. The claimant company is the one to which the loss is surrendered, i.e. the one who has the profit. The surrendering company may surrender as much of its trading loss as it wants to. Remember, any part of a current period loss was available to be group relieved. Those are the critical words to remember. Any part of a current period trading loss was available for group relief. You don't have to relieve, it is not necessary to relieve, the trading loss against that the loss makers own total profits first of all. If you want to do it, you can. But for group relief, any and all of the trading loss is available. The losses that may be surrendered, as we've just said, any amount of a current trading loss, or only any excess or unrelieved qualifying charitable donations, any excess or unrelieved property business losses. We made no mention here about capital losses. We've seen where losses may be made in relation to income, whether it's trading or whether it's property. But what about capital? Well, capital losses are not eligible for group relief, but as we'll see when we look at gains group membership, they are dealt with separately under the gains group membership rules. And what we'll discover there is that there's even more flexibility within a gains group to offset capital losses against capital gains. But it's not group relief. We will see what it is a wee bit later. The claimant company, the relief is taken against the TTP of the same period as the surrendering company's loss-making period. We must offset against the TTP of a corresponding accounting period, and remember, against any part of that TTP. Important points to remember: that losses can be group relieved against 100% of a 75% subsidiary's TTP, or conversely, 100% of a 75% sub's loss can be group relieved. As soon as you have, I refer to it as, but don't refer to it as in the exam, as soon as you have that magic 75% shareholding in a subsidiary company, then you have access to all of its losses, not just your percentage shareholding, all 100% of the losses. So not restricted to the percentage shareholding, all of the losses available when you have the 75% effective interest. As we've said many times, only current year losses can be group relieved. No relief is available for trading losses brought forward from previous years, or indeed any trading losses brought back from a later period. If you have more than one loss to deal with, then the running order for the use of those losses is that we use brought forward losses before current period losses, and we use current period losses before next year's loss being brought back to this accounting period. Just on that issue, if we go back to our previous example, there we had our profit-making company, which had a TTP of 170, and we asked the question, what was the maximum group relief claim available? And that was any amount of that TTP, so the maximum 170. Right. If I had told you in this question that this company, the profit-making company, had a brought forward trading loss of £150,000. It had a brought forward trading loss of £150,000. I'd like you now to work out for me what now would be the maximum group relief claim available this period. Remember what I said? The order, the priority in which you use losses will be brought forward losses, take priority to current period, current period would take priority to next year's losses being brought back into this period. So, given that you've got a brought forward trading loss of 150, what does that therefore mean in terms of the maximum group relief for this period? So, what would that brought forward trading loss of 150 go against? Now, if you are thinking that the maximum group relief this period is, say, £20,000, then no, because that brought forward trading loss does not go against that 170. What does, and what is the only thing that a brought forward trading loss can go against, and of course it is that trading income there. So on a corporate tax computation, you'd have shown trading income less brought forward trading loss. There was £150,000. You would therefore use 60,000 to remove all of that. Therefore, you would then be carrying forward. You brought forward 150, you've used 60 this period. That would therefore leave you with £90,000 of that loss to carry forward. But that brought forward trading loss can only go against the trading income of this period. Any balance, 90,000, is carried forward to go against the future trading profits of the same trade in future periods. So that would still leave your property income and your gains. So that therefore would mean we're now looking at total profits of 120, less the donations of 10. That therefore would bring us down to £110,000. 110,000. And that would be your maximum group relief claim. So remember therefore, the brought forward loss takes priority to the current period loss, and any current period loss, like group relief, would take priority to next year's loss being brought back into this period. Always apply on a strictly chronological basis, therefore. Okay. What that has done is to deal with the vast majority of what you need to know. The only point outstanding down the bottom of these notes here is what happens when you end up with the main situation of non-coterminous accounting periods, i.e. the loss maker does not have the same accounting period end date as the profit maker. And we know that we can only group relieve any losses against the profits of the corresponding accounting period. Well, that and the remainder, indeed, of this group's chapter we will deal with in our next and hopefully final session together on this chapter.